Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast, the show that brings you the latest insights, thought leadership, and stories from across the global mining industry. In today's episode, we have Peter Krauth, who's one of the leading voices in the silver market. And he's going to unpack the past, the present, the future of this often overlooked metal. We're going to start by looking at silver's long history as money and whether it could play that role again, before digging into the fundamentals of obviously supply and demand and the balance between industrial use and investment demand. We're also going to explore who should consider owning physical silver and why, and then tackle the big question for investors: if silver stocks are known for volatility, or do the potential up rewards justify the actual risk? And obviously we're going to speak a lot more all around silver. So Peter, welcome to the podcast. How you doing?
Rob, thanks for having me. I'm doing well, and I think we're going to have some fun chatting about silver today.
Yes, certainly. So I'd imagine a lot of my listeners will know you, especially across North America. But for those, because this podcast goes all around the world, for those that may not know you or not heard of you before, just wondering you just tell us a little bit about yourself, a little bit about your career, how your career has developed, and we'll go from there.
Okay, so I guess one of the highlights or main things to point out is that about 4 years ago, I published a book called The Great Silver Bull. And that was really, after years of researching, writing about the gold and silver space, and then some encouragement from a former colleague who kept saying, Peter, you really need to write a book. And so this would have been, I'm going to say early 2021. And we were about a year into COVID. And I thought, why let a pandemic go to waste? Nobody's going anywhere. I'm not going anywhere. And, take the time. And I had all these sort of ideas about what I wanted to cover in the book in my head, put all that down. The outline barely changed from that original outline, and then about a year later, it was published and available. So it's available on Amazon, in print, in Kindle, and in audiobook version. And in early 2021, so I'll back up a little bit. I've been writing about resources for about 20 years now. In 2020, so actually in the midst of COVID, I had been for about a year and a half writing freelance for mining companies. Former company I was writing a resource newsletter for because of the bear market had folded. And so was doing this for a little while and then decided I wanted to get back into the newsletter space. I connected with Gwen Preston out of Vancouver. She had her own resource newsletter. We teamed up, decided, what niche market might make sense to bring a new newsletter to market. And silver stood out. She had often had a lot of requests from her subscribers. So a few months later, January 1st, launched that in January of 2021. And things were quiet for a while, honestly, because we were still at the sort of tail end of the bear market. And then by, I would say, late 23, early 24, things really started to pick up. Gold had already been doing well, but really started to move. I think generalist investors recognized that gold had moved up and it was going to stay higher, and started to buy silver because gold prices were elevated. And silver would have bottomed, I think, in February of 2024, around $22 or so. And over the next couple of years, as anyone who's been following it has done extremely well, took out its 45-year all-time high of $50 in October of last year. So that took 45 years to happen. And then it took 3 months to double from $50 to $100 from last October. So it's been a wild ride. Silver did what it typically does in bull markets. So here I am with now actually my newsletter, which is a paid subscriber newsletter. A year ago, started a second newsletter that is a sponsorship-based newsletter where companies that we write about sponsor that letter, and it's free to subscribers. And the companies in there have all come from the paid newsletter. So I've followed them and chosen them out of merit, invest in them, and eventually some of them have moved over. And so have the book and these two newsletters, and it's keeping me very busy.
Yeah, I can imagine. I was going to speak about your book at the end of the podcast, which
Okay.
we'll still cover that. Um, Before we speak about obviously silver being used as money, I wonder if you can just give us a little bit, I suppose, an overview of what silver is and the history, and a little bit of history behind the actual metal. And
Yeah.
obviously, it's obviously known as poor man's gold, um, and probably some other names. But I just want to just give us a little bit of a flavour of what silver actually is.
So silver was has been used as money for about 5,000 years. It actually predates gold, from what we know, for use as money. This would have been the first known use would have been in Babylonia. So that was a civilization, an advanced civilization culturally in Mesopotamia, which is modern day Iraq. And they used silver and barley. And I think it was 180 grains of barley or silver were interchangeable, so it was a dual money system. And that was how they traded and paid for things, and it was pretty sophisticated, actually, if you think about it. So 5,000, that would actually, sorry, that would have been about 4,000 years ago, that in itself, but it has been used for about 5,000 years. And eventually silver became, it dominated over barley. It's not, it won't go bad. And so you can do a lot of things with it. It's very practical. And then through different civilizations, I think about 800 years later, the Greeks fashioned the first silver coins, and that became the first true international form of currency, because Alexander the Great, brought them on his expeditions. Others used them, adopted them. And then through the Middle Ages and onward and into the centuries later, you had all sorts of advanced economies and empires using it. The Spaniards exploited a lot of Latin America to mine silver pretty extensively, brought that back home and used that for trade. The Chinese had, for a couple of centuries at least, had silver as a form of money, even had bills that were backed by silver, which they used to trade. And then eventually, it was all the way up until modern day money. So the last real use of silver would have been in the U.S., for example, and in the West, in coins. So silver was in the U.S. Coinage up until the late 60s or so, and then eventually, got removed and replaced by nickel, copper, other cheaper base metals. So really, frankly, silver and or gold have either been money or backed money for about the last 4 to 5,000 years. And really, I mean, I like to point out that if you think about that, then it's only since about the 1960s that we're living in some kind of an experiment where money, day-to-day money, is what we call fiat money. So it's really not backed by anything. And so paper money, so to speak, is widely accepted, but very easy to inflate, as we know. So it gets printed as wished by whichever government is running things, and it helps them to pay for pet projects. So I believe we're going to ultimately, at some point, revert back to some kind of physically backed money by precious metals in some way. It may not happen willingly. It may be imposed on governments at that point, just because the wider population will have simply completely lost any faith in money, fiat money, because it will have been printed so crazy. It's to such a crazy extent. So we will have to see how that plays out. But I that's certainly how I think where I think we're heading.
Yeah. And do you think silver will actually be used as as money? And obviously, I suppose wherever anyone's listening from, we do get coins that are silver coloured, but obviously they're not made. It's not made by silver. It's made by obviously some of the base metals that you mentioned. But do you think will be a time where we will transact in with silver coins?
So interestingly enough, that's something that I do talk about in the book. Um, again, I think that we'll get there because we have to, not because the governments of the day want to. But I think what we will see is, and silver. We'll talk about this probably in a bit, but there's a lack of silver. We're in a structural supply deficit for silver. So some may say it seems silly to use silver as money when it's so in such demand industrially. But I don't think that necessarily rules it out to be used as money in some ways. And some people make the same argument for gold, that there's just not enough gold out there for it to be used as money. And I think that's completely false. It's only a matter of price. So if gold or silver trades at a high enough price, then there's enough of it, because you just break it down into smaller increments, and then you have enough of it. So I think ultimately what we might see is that, because of the developments of cryptocurrencies, for example, they have a lot of benefits. Uh, they have some downsides. The two big downsides for me are, for example, that they're not, they're essentially all or nearly all of them are not backed by anything. So you can create as many of them as you want. That makes them no better than fiat money. Um, because you have inflation. So the ones that are backed by something, ideally precious metals, are, I believe, the most sort of valuable and have the most staying power. The second bigger, I think, challenge is the trust side of it. So, if you've got some kind of a gold or silver backed cryptocurrency, then you have to feel confident that the gold and silver that is held somewhere in trust by someone, for it to back that currency, those units that you hold in your phone or in your digital wallet, so to speak, that metal really is there. So there's that aspect. That's a challenge. But I do think that somehow we will overcome these challenges. And I think that the benefits of a physically backed silver or gold and/or gold-backed cryptocurrency is in a way, from the technology that we have today, is the ultimate form of money, because you have low to zero friction, meaning in this case cost to transact. So if you want to shift money around very, very quickly, almost instantaneously, worldwide, you can do that. There's very little to any cost in doing so, as opposed to wiring money these days, or getting a bank draft and sending that out, mailing it, and so on. So it's much faster, much cheaper. And then if you marry that with precious metals, which have been true money for, as I say, 4,000 or 5,000 years, then you've got the ideal form. But again, there are these obstacles that we need to work through and resolve. And then I think we could have the most ideal, so to speak, form of money at that point.
This episode is sponsored by Mining International. In today's market, finding the right mining talent isn't easy. Mining International works closely with mining companies to identify and secure senior and technical professionals through a tailored search approach. If you're hiring or exploring your options, you can contact Rob Tyson via the show notes to start a conversation today.
I wonder if you can just comment on the silver's obviously supply and demand characteristics. And obviously, a lot of our listeners are from the mining industry, so they may know about some, may not know about some others.
Sure. So I like to try to start at a high level. And the silver market is about 1 billion ounces of supply every year. And about 85% of that comes from mining. And then about 15%, the rest of the 15% comes from recycling. And in the last 5 years, we've been in what we call a structural supply deficit. So we have been consuming anywhere from about 10 to 20% annually more than we've been bringing to market through recycling or mining. So the first question is, well, how can you have a deficit for such a long period of time? And frankly, I started to dig into that a couple of years ago, wondering the same thing and wondering why the silver price was pretty much flat, let's say from 2020 or so onward until 2023, 2024. Why, if there's such a lack of supply, um, and we're in a deficit, why is the price staying flat? Well, I believe that the answer is or was because in prior years there was more produced than was consumed. So most or a lot of this oversupply found its way either into private holdings and into the futures markets. So there are several billions of ounces held in the futures markets. The big ones are the COMEX in New York, the LBMA in London, and then finally the Shanghai in China. And what I realized in early 2024 as I started to dig into this was that um, these supplies had peaked. They had peaked in early 2021, and they had been falling off pretty steadily. And so the interesting part, or the important part to, I guess, grasp of this is that, yes, there was a deficit, and it had been ongoing at that point for about, say, 3 years. But the big consumers, like the big industrial consumers that buy, tens of millions of ounces, perhaps some of the bigger ones, every year, they were able to go to the futures markets where billions of ounces were sitting and just go and buy those ounces right off of that market. These were like stockpiles sitting above ground, already produced silver. And if you're buying this already produced silver at the prevailing price, you're not putting pressure on either recycling or mining to bring additional supply to market. You can just draw down on what already exists. So I said, well, okay, that's fine. And that explains that the price is not moving, although you've got a deficit. It's kind of flat. But that deficit will not last forever. And if you've got this structural deficit and it's projected to continue, then at some point those secondary supplies get drained down, and then you have a real squeeze. And I think that's what we saw happen through last year, the year prior a little bit, but especially through last year. The market came to terms with the fact that we weren't bringing enough silver to market. We'd drawn down on what we had above ground, and the reaction had to be a higher price. So that's sort of the big picture supply demand side. Then we can dig into where how that demand breaks down, if that makes sense. So between in what I call essentially industrial demand and investment demand. So about 5 years ago, it was 50-50. About half of silver demand came from industry. The other half came from what I call some form of investment demand. So I include in there jewelry, silverware, and physical investment demand, which is basically coins and bars. And so about 5 years ago, half was investment, the other half was industry. So you fast forward to last year, and we're at about 67% now of silver supply going to industry. So that squeezes out the available amount of silver for the investment side. So it went from 5 years ago at half to a year ago or last year being only a third of silver supply being available for investment. So I think that helps explain too what happened last year. You had industry realizing that new supply was not, no meaningful new supply was coming to market. They had drained above ground supplies, and you had the investment demand that really had come back in a big way. I think investors had seen gold move up very steadily, very significantly over the prior 2 years. And a lot of that had come initially from the central banks that had been buying in a big way since 2022 or so. And the investor side, the general investors came into that market and said, okay, I need some gold. Gold continues to move up, but silver did what it usually does, and it lags gold, but then outperforms because there's this FOMO effect where people will look at gold, see that gold has gotten expensive, so to speak. Let's say, $3,000-$4,000. Eventually, it came to $5,000. And then people looked at that and said, "Well, what other alternatives do I have?" And silver is usually that natural alternative to gold because, at you can get at current ratios. So there's what we call a gold silver ratio, means at a given point in time, if you look at the price of both metals, how many ounces of silver it takes to buy 1 gold ounce. Today, we're around 62, 63 ounces of silver. So, and about a year or so ago, we were over 100. So silver was very cheap relative to gold. It took a lot of silver ounces to buy a gold ounce, and gold was expensive relative to silver. So people saw silver as cheap, and decided to buy more silver than gold, and really squeezed that silver price. And it went from $50. I like to say it took, and I said that earlier, it took 45 years to get to 50, and then it took 3 months to get to 100. And I think that big squeeze pushed it really, in fact, up to $120 in late January. So it's come back significantly since then. I had said at the time, it was very exciting and so on, but it wasn't sort of a sustainable kind of price gain in the near term. So that really helps to talk about the supply demand characteristics. And if you'd like, I can go into a bit more specifics in terms of what industry consumes it for, what the percentages look like, and give you some idea there.
Yeah. Go ahead.
I've been
Yep.
talking for a while there, but it's not a problem. So what I like to call the 800-pound gorilla in the silver space is the solar demand aspect. Solar panels alone take about 20% of all silver supply every year. So out of, say, 1 billion ounces, 200 million ounces every year go to just solar panels. And that has doubled over the last, say, 5 to 10 years. For a few reasons, but mostly because solar has rolled out in such a significant way. It is the single cheapest form of incremental electricity to be produced by utilities. It's dominated by China, like so much manufacturing. They produce about 80% of the world's solar panels, and they need a lot of silver to do it. But silver is also consumed a lot in industry and other things. You find it. I mean, it's amazing how in the last maybe 40 or 50 years we've found so many new applications for silver because it has some fantastic characteristics. It's the most conductive electrically. It's the most conductive heat-wise, and it's also the most reflective of all metals. I've been told that gold is actually more reflective, but it's so much more expensive that it becomes impractical. So silver has some fantastic industrial applications, and you find it in medical applications. A couple of examples are, let's say, topical creams for burns. You could find it in bandages for burns because it is a biocide, so it'll kill bacteria, and the bacteria do not grow accustomed to it, so it's continuously effective. For that reason, you find it in cornea replacements as well. You find it in things like water filtration systems. People have told me that, they anecdotally, their families used to put silver coins in a wine barrel because it would help keep the wine fresh. You find it in fuel rods for nuclear reactors. Silver has more than 10,000 industrial applications. It's the second most used commodity after oil. In different ways, not quantity-wise, but in different ways after oil. So that's really quite impressive. And then, of course, we have, what we know of forever is that silver is used in things like jewelry, in silverware, and of course, people will just buy it as an investment to hold and to save in coins and in bars. And some interesting developments, because the gold price has moved up so much, is that especially in Asia, we've seen silver take on a bigger role in jewelry consumption, because so people will, that traditionally would have bought gold for jewelry or to give as gifts culturally and so on, they will now buy either silver, or they'll buy gold-plated silver. So, the higher gold price has driven, to some extent, higher demand for silver in jewelry. So it's quite impressive. It's an interesting market, and it's really the only what we call a hybrid metal that has two roles. It's traditionally had a role as money, and more and more it's developed a role as an industrial metal.
Yeah. If we look at the continuing with the supply and demand theme and looking out to the future, and obviously you've mentioned all the different varieties of items that silver's needed for, what has happened? Again, from my knowledge and understanding, that China do process and refine about probably 3/4 of the world's silver. And I know from, I think, January the 1st, they put sort of licenses out on then exporting silver back out into the market across the world. How's that going to affect the global supply of silver if they're going to pick and choose who they're going to export the silver to, and to the end manufacturers or OEMs, for instance, that need this silver?
Well, great points, and you're right on both. So yes, they process about 60 to 70% of the world's silver. So even if it comes from somewhere else and then ends up back in a certain country, there are some reasonable chances that it has gone through China at some point. And you're right also that they have a new sort of scheme where they're limiting or controlling exports more rigidly out of China. I think that's just going to add to the shortage. They will obviously favor their manufacturing base because, as I say, solar requires so much silver. The other thing to consider is that there's a lot of silver that goes into a few other things like electronics. I like to say silver is never more than about a meter away from us. It's in our smartphones, our tablets, our computer screens, our keyboards. You have it in electronic switches. It's very it's high quality. It's a high quality metal that ends up being very responsive. It takes a long time to corrode. It's you find it in chips, microchips. You find it in. We can talk actually. There's another interesting aspect about the demand side, which is data centers and AI. But you find it in the cooling systems of data centers. All these big servers require silver to some extent, and so people have said, well, if silver gets expensive, it makes solar panels more expensive. That may slow down the uptake of solar. There are different ways you could see that. I think that it's a concern, certainly to some degree, especially if the price remains very elevated. And by very elevated, I mean $90, $100 or whatever for an extended period. If we get there gradually and keep going, I think that's maybe a little bit less of an issue. But I think that if that happens, because it's such an important form of new energy, and I was just reading this morning that there's a huge uptake from solar manufacturers saying that we're seeing huge demand all of a sudden because of this war in the Middle East limiting the access to oil. People are saying, I don't want to be reliant on that. I'll buy solar panels. I'm, self-reliant. And so we can talk about, especially the data centers and AI. So data centers, at first, it looked like the big magnificent seven. So the Microsofts and the Apples and Metas and so on. Some of them initially turned to nuclear power, which makes sense because it's what we call baseload power, meaning you can draw on that power and it's constant. It's all day long, every day, very reliable, very steady. Solar to some degree that's changing, but doesn't have that benefit. So obviously, you produce energy during the day, but you don't produce it at night. Now, that is changing. I had said that I thought that the data centers would uh, focus on solar to a large degree. One, because nuclear is a lot more expensive. It's a lot to build, not to operate, but to build initially, and it takes 10 times as long. It takes 15 years from inception to first production of electricity from a nuclear power plant. It takes a year and a half from a solar plant. And any data center that has, for example, the sufficient land where its center is, could build out its solar farm right at site, not rely on a utility to produce the power and buy it from them. They could just produce it, have immediate access to it, and once it's paid for, it's got very low maintenance costs. The other benefit of solar is that it's considered a green energy. So I believe that you could see, we have seen it in the past and we'll continue to see it, I think, to some degree. And even if the prices go up, or especially if the prices go up, we're going to see governments subsidize and perhaps even increase subsidies to keep that form of energy growing, and obviously to support industry that manufactures the solar panels. But what we've seen, there's also been a significant game changer in the uptake of solar as what I call a new baseload power source, and it's batteries. So batteries themselves, depending on the technology, will consume silver. But more importantly, the price of batteries is falling by half over the next 10 years. We've seen significant uptake of battery storage by solar farms. And so what that allows is for power to be available at night. So you can produce power from solar during the day, store extra in the batteries, and then when nighttime comes, you start drawing down from your batteries. And then you've got your 24-hour baseload power, and you're competing with nuclear, for example, at that point. So falling battery prices, more sophisticated and productive battery technologies are really changing the game completely for solar, making it baseload power, making it that much more attractive. And I think we're going to see some economies of scale help to keep a bit of a cap on solar prices as well. So that's a really, I think, interesting area of the industrial side of demand to keep watching.
Yeah, certainly is. If we look at physical coins, silver coins, who should own them, and why should you own physical silver?
Well, I think everyone should own some. I think everyone should have some exposure to silver. I think physical coins are the least or the lowest risk way to have exposure to silver. Silver has been, as we talked about earlier, has been money forever, and it's a form, perhaps maybe more of savings rather than investment. But if you are in the cycle at the right time or at a good time, and you could have bought it cheap and then and watch its price, its fiat dollar price rise significantly. But because there's no claim on silver. It's not like owning a bond, for example, or anything else that or treasuries. Stocks that you have to be able to sell it. This is a physical thing you could bring to someone and say, here, this is worth $50, $70. I need to fill up my tank. In fact, I have an anecdote from a few years back. This is from a stockbroker in Toronto, who's a fan of silver and a big investor in silver, has many of his clients in silver mining companies. And what had happened was we have like everywhere, we have the payment systems where you can tap your bank card or your credit card to make a payment. Well, that relies on cellular or mobile networks. And the network had gone down for several hours during one day. This is a major network in Canada. And so people could not pay. They couldn't pay for their meals. They couldn't pay for car repairs, all sorts of things. This guy couldn't pay for the fill up of his gas tank. So there was a sign at the gas station saying that, we can't accept payment. So, but he needed to fill up his tank, and he had some silver coins on him. So he went to the guy at the booth and said, at the time silver was about $30 US. And he said, look, I know I can't pay with my bank card or my credit card, but will you take a silver coin if I put $30 US worth of gas into my tank? And the guy said, I will take that all day long. So it goes to show you, we're not in that kind of environment, obviously in a wider sense right now, but it worked for him. And I believe that kind of thing can and potentially will work again. So that's an example. I think we hopefully not, because it could mean some other dire things, but we may get there again one day. Nonetheless, its value, it continues to rise. And so I think that makes sense. It's a very sort of solid, low risk form of savings that is yours. It doesn't have any outstanding claims on it. It's integral in itself.
Yeah. If money was sort of no objective, and what I mean by that is if you had the choice to either buy silver or gold, what would your actual thought process be in terms of, shall I purchase some gold or shall I purchase some silver? I wonder if you can just share with the audience the thought process of why you probably look at silver rather than gold.
So I would suggest that you need to own both. And so, and then it becomes a question of, to what degree, which one. And that will naturally change in some ways over time as their prices, move to different degrees over time. So, in other words, if the price of silver moves up much faster, well, then if you had maybe 20% of your physical metal allocation in silver a year ago, today maybe we're 30 or 35%. So depending on what your goals are, you may want to readjust. But the sort of big answer to that, or the high level answer to that, for me, is your risk tolerance. Silver is going to be more volatile and obviously in that sense riskier. And so depending on your risk profile, you may want to own more or less silver to account for that volatility. We all know gold is sort of the metal of kings, and it's the standard, right? That's why we call things the gold standard. But if you're looking at a given point in time, which metal may make more sense, or if you're going to allocate across both, if you're looking at how should you choose a percentage, I would refer to the gold-silver ratio. And so right now we're at a point where if you look over the last, say, 30 years, 30 years, we're at about an average, which is about, say, 55 to 65, in that range. So it takes about 55 to 65 ounces of silver to buy 1 gold ounce. Today, as we speak, we're around, I think, 63 or so. But that ratio gets out of whack. And as I said earlier, about a year ago, we were at 100 or 105. I believe it was April of last year. So it took 100 or so ounces of silver to buy 1 gold ounce. That meant silver was cheap. And if you were willing, flexibility wise, it would have made more sense to emphasize buying silver at that point over gold, to some degree at least. And then when silver went to 120 at the end of January, I can't remember exactly the gold price. They must have probably close to peaked around the same time. I think gold reached about $560. If memory serves me right, the ratio had fallen to about 40 or maybe mid 40s, and that made silver relatively expensive versus gold. So the ratio was somewhat out of whack. And so at that point, if you were buying, then it would have made sense to buy more gold versus silver. So these are ways that you can use the gold silver ratio to decide which metal to emphasize at a given point in time.
We've obviously been speaking about silver coins, silver bullion. If we move on to stocks, why should we own silver stocks?
For leverage, it's that simple. Because silver stocks will significantly leverage the price of silver, and we've seen that happen over time, over and over. It doesn't happen immediately, and I'll give you some examples. If you look over the last, say, 5 years, on average, the silver equity sector as a whole has lagged the silver price. So almost 2 to 1. In other words, silver outperformed, doubled essentially the group of silver stocks over the last 5 years. So that's not what you want. You're taking extra risk that shouldn't be the case. And it's not the case over time. If you look over the last 2 years, they're neck and neck. So essentially, you had the same return from silver as you had from silver stocks. And I think that's about to change in a big way. Now, that's not to say that silver stocks in the last couple of years haven't done well. They've only essentially kept up with silver, which has done extremely well. So there are many in the portfolios that we write about that are up 5 times, 8 times, 10 times in the last year or so. They've come off significantly in the last couple of months. That speaks to opportunity. But normally you should be getting about at least a 2 to 1 leverage from silver stocks over silver. So, and I believe that's going to start happening. And the reason for me is we are in an environment now where the silver price, the average silver price on, let's say on a quarterly basis, is significantly higher than it was a year or even a few quarters ago. And so if you're averaging, say, $60 or $70 per quarter, we're going to start to see in the next few quarters, the producers in particular, reporting their revenues based on having sold their silver production at much higher prices than a year ago. And if you see that over a couple of quarters very consistently, the market wakes up to that and says, wow, like these profit margins have exploded. When an all-in cost for silver, let's say, is about $20, and if you're selling silver at $30, which we were about a year ago, then you have a 33% profit margin. If you're selling it at $90, which we were, let's say in December or early January, then you have your profit margin has more than doubled to 78%. So these margin expansions are just tremendous. And I think that the market will see that when these quarterly reports start to come out. And they're going to start paying a lot more attention and start to bid silver stocks up significantly. There's a couple of other interesting things to point out. And one of them, for example, is that silver is a very small sector. Gold mining is in itself, but silver is perhaps a tenth the size of the gold mining sector. And so that means there are much fewer names to invest in. And what we've seen is if you look, and this you can do very sort of naturally and in an unbiased way. If you look at the price to net asset value of the larger established gold producers, it's about 1.3 times. And if you look at the price to net asset value of the larger silver producers, and there's really only a handful of perhaps 5 or so, they trade at over 2 times, so 2.1 times. There's a scarcity premium, essentially, you could say, to owning larger silver producers. So that's in itself quite interesting. Then if you look at just within the silver space, with these producers trading at 2 times their net asset value, if you look at the developers are trading at 0.2 times their net asset value. So to move from developer in this space right now to a producer is a 10x. And you're not at the riskiest part of the curve. You've still got you've got perhaps some junior producers or some smaller producers. You've got some junior explorers. You've got some pre-discovery explorers. it's all across the spectrum. And so this is, I believe, where, and this is what I've been saying for the last couple of months. I think I had been saying that the silver price was, sort of the big opportunity. And now I believe it's the silver stocks that are going to be over the next couple of years, the next opportunity in the silver space, because they have not reflected the increase in silver prices. And I believe they're going to very soon.
Obviously, you mentioned your book, The Great Silver Ball. Just wonder if you can just tell us a little bit more about the book and what's inside.
Sure. So that was published 4 years ago. As I say, it's available on Amazon, print, Kindle, and audiobook version. Really, I go through, my idea was to talk about the silver sector, the silver space, why someone, what someone needed to know about it, why it was important, what makes silver move, the supply demand, influences, and then how the silver mining sector works, how to invest in it, and ultimately how and when to sell, what sort of signposts to look for. So the first part is the history of silver, which we talked about, how it had been used going back about 5,000 years. And then I talk about some of the macroeconomics within silver, and even that going back a few centuries. And then more recently, and we talked about how, silver had been removed from our day-to-day money. But the fact that it had been money doesn't mean that it has lost sort of that benefit, and how I think that can return. And I talk about things like inflation, what kinds of indicators point to where we should be or likely to be in a very much an extended bull market in precious metals. I talk about things like financial repression, when which we're certainly living now, when we have governments have massive debts and look to keep interest rates s- uh, especially low and on purpose, despite inflation being high. And that's a true sign that we're going to reach a point where people will clue into this. These central planners will lose credibility because they keep saying that, well, we raise rates when inflation goes up so we can cool down inflation, and yet now they're cutting rates even though inflation is elevated and rising. So they lose credibility, and people say, okay, I need to find something that maintains its purchasing power, and gold and silver are the ultimate in that respect. From there, I talk about the supply-demand characteristics, how silver is used, and we touched on some of those. I go into a fair bit of detail there, and how how that has changed and developed over the years, the different applications for silver use, and so on. And then I talk about how silver is found, how it's mined, the different ways that you can, I try to make it not academic. I want it to be accessible to people who, don't have, let's say, experience investing in this space, but to understand what drives silver, but also what drives silver mining and how those investments work and what things to look for. I talk about different kinds of studies that a mining company might make. I talk about how you would build ultimately a silver equity portfolio. Silver, and by the way, I think the best way, and that's what I do, but is to have a portion physical and then a balance in the equities, and how at least I go about doing that, and how to balance that, and how you should again know yourself as an investor in your risk tolerance. And how some of these stocks have performed, even some of the largest cap companies have performed tremendously well in prior bull markets. And then, and what to expect and where I think silver is going, because I do talk in the book about my ultimate price target for silver being at $300. And so I can tell you 4 years ago when silver was like sub $20, it sounded pretty crazy, and I was called, sensationalist for it and so on. And my goal was really not to be sensational. It was to say where I thought things were going as in an unbiased way as possible. And really what I did, Rob, very quickly is that I looked at prior peaks in the silver price. And I looked at other assets and I said, okay, well, what was going on at that time and what made silver go to that price, and how expensive or cheap was it relative to these other assets? So without getting into a lot of detail, one of them was the gold silver ratio. And there I have 3 or 4 other indicators. But at the peak of $50 in 1980, gold was $850. And so that was about a 15-to-1 ratio. So when I projected forward, now remember, this was in 2022 when this came out, and I was saying, okay, I'm going to make some assumptions on the gold-silver ratio. I'm going to make an assumption on the gold price. So I thought, realistically, ultimately, gold's going to go to at least $5,000. So that sounded a little crazy then too. We were barely at 2,000. And so here we are. We've been to 5,000 already, just 4 years later. But if you take the ratio of 15-to-1, at $5,000 gold, you're at $333 silver. So we've been to double digits, triple digits already now in silver. So that sounded crazy to many people, thought it was never going to happen. Silver's been, lagging for decades and decades since reaching $50 in 1980. And so many other metals had outperformed it. It's never going to reach that $50 again. And even if it does, that doesn't mean it's going to take off. Well, it did, and it did take off, and it went to, as I say, $120. So ultimately, my target is $300 in silver. And honestly, I've heard some, people I consider to be quite respectable and serious analysts think it's going to go significantly higher than that, even ultimately. And again, I'm not saying that it goes and stays there, but if you get some kind of a mania phase, which we did in the late 70s, we could certainly see, I think, that kind of thing happen again. And then finally, the last part of the book is how and when to sell your silver and what kinds of clues to look for. I think we will get to that point ultimately. I don't think this, and it's probably too long to get into this, but I think for different reasons, this bull market will not play out ultimately, will not end in a massive mania phase for the metals. I think the reason for that is because I believe they will regain their role as money eventually and not crash, so to speak, like the prices did, say, in 1980. I do think, at least for the equities, you were going to reach it, but I'm talking 6, 7 years, perhaps even 10 years from now, where we could ultimately reach that point. But we're going to want to look for signs, and some of the signs are the gold silver ratio, reaching a very low level, the silver to the S&P, the gold to the S&P ratio reaching a much higher level where gold has become quite expensive versus stocks, things like that. And then the anecdotal stuff where you go to a cocktail party and everyone's talking about the silver or gold stock that they bought and they made 10 times return in 6 months. These are the kinds of signs we're going to want to look for at that point. And that will very likely suggest that we're at or near a peak. So how to handle that when we get there.
Yeah. And lastly, and concluding, how do you see the silver market over sort of the next 3 to 5 years? And obviously you can talk about bullion, you can talk about stocks, you can talk about supply and demand, but just concluding this episode.
So I would say the next 3 to 5 years, we're going to see silver continue to climb. We've been through a pretty wild phase in the last several months. If anybody hasn't paid attention, as I've said before, where the price has gone. So we're in a bit of a cooling off period, but I don't think that there's always a chance. I think at the very least, $50 will likely or unlikely go below below that level. I think that was a technical breakout, a 45-year breakout. We could go below. I don't think it would be by much, and I don't think it would last for very long. That would be pretty extreme. So I think that is an absolute new floor, and I actually think that more realistically, more reasonably, in the sort of 55 to 65, 70-ish, which is we're at 70-ish as we speak. I think that's more of a new floor at this point. And I think we could see triple digits again late this year or early next year. Once again, but I can tell you silver miners are very, very, very happy at $70 silver. Some of them were saying to me 2 years ago, if we could just get back over $30, and here we are, we've been to 70, 80, 90, and we're hovering at 70. It's just tremendous for them. So the silver price, I think, will in fits and starts, there will be a fair bit of volatility, but will on balance trend higher. And I think that we're going to get more significant moves in the equities. I think because the market has yet to come to terms with what that's going to mean for profits, revenues, and then profits. And I think that we're going to see that trickle down. The ones that have moved sort of the most so far have been the larger producers. Of course, we've had some juniors do very well also, but the larger and the middle area producers have done really the best. It's going to trickle down. And I think what's going to help that trickle down is when the producers get revalued higher. That of course pushes their share prices much higher. After a while, the CEOs of those companies see a much higher and sustained higher silver price. That makes them comfortable with taking on a certain amount of risk and saying, okay, well, if silver stays at least $70 or $80, that's, let's say, our floor going forward, then I am willing to spend on exploration. I'm willing to spend on expansion. And I'm willing to spend on acquisition. And they will go out and use their higher share price at that point as a currency to go out and acquire, exploration projects or more advanced exploration projects or smaller mid-sized producers to instantly, grow their output. And what that does, remember, is that shrinks the space even more because you've got two names. Of course, the market caps stay, some kind of a combined value, but the number of names to invest in just sort of keeps shrinking. So I think that's how we're going to see things play out. The lower risk end of the curve, the spectrum, investment spectrum, will see expansion, price expansion first, and it'll trickle down over the next few years towards the juniors, more and more towards the higher risk end of that space. So, again, investors kind of need to know themselves. It doesn't mean you have to be exposed to all of that. I'll give you an example. In the 2000s, which was arguably, for me at least, the first half of this secular bull market, silver went from, in 2001, $4 to $50 in 2011. And in that time frame, in those 11 years, you had in one time span, about 4 or 5 years time span, you had Pan American Silver, which is one of the largest silver producers today, public silver producers, had a 16x return on its share price. From about 2008 to 2011, Wheaton Precious Metals, which is the largest public, it's not a producer, but it's a royalty streaming company, talking tens of billions of dollars market cap. Not then, but today, had also similarly a 16x return on its share price. So these were some of the lowest risk stocks you could buy in the silver space, and you still had those kinds of returns. I think you can see that. You may just need to go down one notch to perhaps the mid-sized producers, and you can certainly see those kinds of returns over the next few years. So it's going to be, I think, a really interesting and profitable time to be invested in this space.
Yeah, certainly. Peter, really appreciate your time. Thank you for sharing your story. Thank you for educating our mining industry on silver, whether that's bullion, whether that's stocks, the supply and demand, and obviously what silver's actually used for. And there's a lot of things silver's used for, and a lot that I didn't know. So Thank you for sharing that information with our audience. And as I mentioned, a lot of our audience are from the mining industry, so they may know some of this, they may not know some of this. So thank you for educating our industry. And if our audience obviously wants to reach out to you, obviously if they want to purchase the book and obviously sign up to the newsletter, how can they go about doing that? And what social media platform channels are you on?
Well, thanks for that, Rob. So the book is available on Amazon. It's The Great Silver Bull, easy to find there. And then the newsletter is Silver Stock Investor. So if someone goes to silverstockinvestor.com, that will, you click on the newsletter or and subscribe. That brings you to a portal site, because I'm actually partnered with someone by the name Jeff Clark, who publishes a couple of newsletters himself that are more gold, copper, uranium focused, and so on. Other than that, I'm very active on X, the old former Twitter. I'm active on LinkedIn. You can find me on both of those platforms. And, feel free to connect, follow, reach out, and be wonderful to have more people involved in this space.
Yeah, we'll include those all in the show notes accompanying this podcast. So for easy access for our audience to follow yourself, reach out to you, maybe purchase the book, maybe sign up for the newsletter for easy access for them to do that. So thank you again. Really appreciate your educating our industry. And I'm myself actually investing in silver. So that's really good to hear your thoughts. And I agree with obviously all of that because I've been following the silver story. So thank you again.
Rob, it's been my pleasure, and look forward to chatting again.
Yeah, thank you. Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. And I think this episode surely should be shared with obviously people within our mining industry, but definitely people outside of our mining industry, because silver, as Peter's alluded to, isn't just a material used for just industrial use. It is used in monetary, and obviously whether you're collecting bullion or whether you're looking at shares or stocks, certainly it's a great time to look at this industry and look at this particular commodity. So really appreciate if you can share it to people outside our industry as well as obviously people inside our industry. Thank you again for listening, and until next time, happy mining.